My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll be one of my friends. I'm just trying to make you some money. My job's not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. How do we explain today's rally? Dow surging 596 points. S&P pole vaulting 1.86%. NASDAQ jumping 1.62%. Was it the prospect of a soft landing for the economy? Or a reopening for China? Or the Fed chief getting tough on inflation? Or the earnings from tech and retail? Or the stalling of the Russian advance in Ukraine? Or was it just random, like so many up days of late? Before you can understand what happened today, if it can be fathomed, you need to know where we're coming from. Last night, I felt absolute desperation when I came out here and tried to be positive. People told me I was the only positive commentator on air, and that was viewed as a negative. See, I hated being alone on the bull side because everyone just dismisses you as some sort of cockeyed, non-rigorous optimist. As I said last night, the world favors pessimism. Even as the Dow has rallied from 1,000 to 33,000 since I got into this racket some 40-odd years ago. And, of course, the whole time I was trying to be constructive, you have this madman slaughtering innocents in Ukraine, with the hapless Russian generals just nodding, agreeing, pulling the trigger, even as Putin seemed to think his troops would be welcomed with garlands. The only garlands they're seeing are the ones on Russian graves. So it doesn't seem right to try to make money now. No more than it seems right to crow about a great quarter, right, when you're praying that the Russian military throws away its professionalism and orchestrates a palace coup against Putin. Isn't that what you want? At a certain point, you have to believe that the squeezed Russian oligarchs will take action. But they've been living under his thumb for more than 20 years. They have good reason to be afraid of him. Still, one thing's for certain. If a market rallies when nothing seems good, as it was when I left last night, that means there's something good lurking over the horizon. It's just that we haven't recognized or factored it in yet. What's something maybe we're talking about here? Well, let's acknowledge that not all the dreams I mentioned earlier need to come true in order to ignite a rally, sustained rally, not one day, when stocks have already come down so far from their highs. Notice I didn't call them cheap. Many are, but some remain expensive. I just mean that tons of names are down 30, 40, even 50% from their highs. Good quality names, which tells you that the reflexive dip buyers, well, you know what happened to them? They've been completely blown out.
That was easy.
They're gone. So which of the bullish dreams can explain away a rally where the advanced decline line finally turned a resounding positive? Meaning the move up was broadly based and healthy. And by the way, this is the first one of these so-called big lifts that was like that. Well, first and most obvious, there's the clear-eyed logic of Fed Chief Powell. I don't know what kind of derision Jay has to bear, but I can tell you that when I defend him, I'm pretty much instantly considered a lightweight or a knucklehead. His critics are legion, and they repulse me. You know why they repulse me? Because they hate him until he opens his mouth and speaks, and then they fawn all over him until the next time. Clowns. That's what happened this morning when he went in front of Congress, said that inflation's too hot, has to raise rates, 25 basis points, pretty good start. That took the March Fed meeting blues off the table. While Powell acknowledged that inflation is certainly way too strong, he made me feel like there could be a soft landing, meaning that he doesn't feel the need to destroy the economy in order to save it from the threat of inflation. Powell did his job. He made us feel confident. That changes the equation. And it made me feel personally that the situation, which seemed out of control to many, is under control. And unlike the summer soldiers and sunshine patriots, Jay Powell, I'm all in. Does it mean we've already peaked with inflation? Is it at peak inflation? No, absolutely not. Inflation abounds, especially with the grains and the fuel complex raging higher. Remember, though, they don't have to go down immediately. There just has to be the possibility, that's your key word, possibility that they'll go down at some time in the future. And Powell reassures that they will. Remember that the stock market is at all times a game of possibilities. And if one is credible, it has to be included in your calculus. How about Russia? It's telling that the defense stocks were down today after President Biden gave a State of the Union address because he didn't talk about arming Ukraine with the latest weapons that we have. That would have been a certain escalation. I'm beginning to believe, though, we've been looking at this war all wrong. I think you have to look in a tragic way. Look at it through the lens of Iraq, the last time a major world power invaded a medium-sized country. Like the United States back then, the Russians thought they'd be greeted as liberators. I remember having dinner with a general who was the architect of the post-war reconstruction, and he figured we only need to leave a small group of soldiers behind to help rebuild, just support troops, no need for frontline combatants. He got fired pretty quickly when he realized, when all of us realized, that we were in a dangerous quagmire, and that's the word you're going to start hearing, quagmire. Similarly, I'm told that Putin assured his generals that they'd be welcomed by the people of Ukraine, that they were liberating the country from a lightweight leader whose previous job had been an actor. Well, guess what? You could have said the same thing about Ronald Reagan. Turns out actors have a pretty good track record against Russia. Which brings me to the grave misjudgment of Putin and his kleptocracy. It's not that Russia will lose the war. So far, Putin doesn't seem to care about the sanctions, although if his pals' yachts get taken away, maybe it'll hit home. The issue is that even if Russia wins, what does it give him? Sure, they can occupy Ukraine, but they'll have to leave a puppet government backed by a gigantic standing army that could tie up their entire military for years and years. And that's the best-case scenario for Putin. If he somehow loses the war, still unlikely, he'll have so much blood on his hands that he and his regime will be reduced to mendicants, begging for scraps from the People's Republic of China before they'll be overthrown. Not that China would give them money other than payments for energy. Meanwhile, we have to acknowledge that business, the business of companies is as strong as I've seen it. The ones that are reporting, I don't mean just the oils, which are outstanding. How long can that last? Well, I'm going to defer to Rick Muncrief. He's the CEO of Devon Energy, who'll be the Investing Club's special guest for a meeting at 12:30 sharp on Friday. Be there. The retailers, sure, Target was terrific as expected, following in the footsteps of Lowe's and Walmart. But how about Nordstrom? I'd given up on that stock a long time ago, even as I like to shop there. When Nordstrom shoots the lights out, you know the consumer's extraordinarily healthy, despite $111 oil. Most impressive? Tech. Now, I know Salesforce stock fluctuated, to say the worst, up 7, then down 7. But it's absurd. It's down 100 points from its peak. At the same time that Salesforce printed by far the best quarter it's had in years, right on the heels of a great number from its cloud compatriot, Workday. But heaven forbid a company just sells a lot of product and loses money. This market is saying, just say no to this kind of stock, including two that we're talking to tonight, Okta and Snowflake. When you factor in that both our country and China are taking off the mask again and they're going out, you have to believe that people are contented to have some degree of COVID in their lives as long as they're vaccinated. So you're getting a lot of very visible stocks that are humming. Bottom line, once again, you do not need the whole parade of positives to play out because we only have so many stocks that are in bear market mode. That's what matters. In fact, you only need one or two positives to ignite a sustained rally. If we get more with this level of negativity, the market could be like a coiled spring because so many stocks are in bear market mode. Nonetheless, I still expect it to be a very bumpy ride. Let's go to Draper in California. Draper!
Booyah, Jim.
Booyah, Draper.
I'm not sure if you saw, but the market went up today.
Yeah, well, you know what? Periodically it does that. I don't know. Everyone's so negative, it kind of came as a shock. I'm not sure people recognize it. What's up?
Right. My question is on Carvana, ticker CVNA.
Yes.
They reported earnings a week ago, missed a bid on EPS, topped revenue estimates, and also announced the acquisition of physical auctioneer Car Auction Services. They did, however, note in their guidance rising used car prices as a dent in their business, along with rising interest rates. My question is, with the macro events happening, geopolitical factors holding up against this market right now.
Okay, this is a tough one, Draper. Here's the problem with Carvana. You know, when they started, they were the only guy at it. Now there's so many, including, don't forget, Lithium Motors is in there. There's so much competition. I like those guys, but you can't have competition and have a high multiple stock, and in this market, expect to make a lot of money, and they are losing money right now, and maybe that's all we need to know. Now, you don't need the whole range of positives that I just outlined to play out, because so many stocks are in bear market mode, meaning they're so low from their top. You only need one or two positives to ignite what could be a sustained rally. Hey, look, I came here last night and told you there might be one, and we got one. Let's like that last guy, like Draper. It did go higher today. Oh, man, buddy, tonight. Okta reported to the bell. Not sure that it's exactly what the Okta ordered. That's like, Okta, like Okta. I'm checking in with the CEO. Then the market has been rocky, to say the least, but it's finally time to piece through some high-quality stocks that have high yields that didn't used to be because the stocks used to be much higher. I'll reveal some names I'm watching. And fresh off earnings, I got to figure out what the heck happened to Snowflake. We'll talk to the top brass. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.